Are we good? All right, there we go, Roman with the knowledge. Yeah, so please forgive me, guys. I haven't streamed in fucking years. I'm kind of rusty on this shit. So hopefully everything will go smoothly. Yeah, so I don't know. Let's get this party started, I guess. Right. Let me get my bullet point thingy up. Anyway, so introduction, not financial advice, yada yada, all that kind of crap. You guys know the drill. It's not a trading strategy. It's just a pattern that I noticed back in February this year. It's not like super complicated at all, but I do kind of want to like build up to it a little bit, just to kind of, you know, wake myself up, because I just woke up. I'm kind of groggy, so let's just start with some basic stuff, and I'll try to like go over it really quickly, not, you know, stall too much and stuff, because we want to get to the good stuff. So I'm mostly going to be using the Fib tool. I think it's like one of the best tools you can use on TradingView. Anyways, I just use it in, let's say, unorthodox ways, maybe. So yeah, you guys are probably gonna, some of you are gonna or like maybe not like it, but we'll see. So let's see. One little trick that I use, this is just like to show you guys something, is if we take a Fib tool and you go into the settings, you can do this neat little trick where you take, let's say, for example, this level 125, and you put the same level right before it. So the way it flows is like this, from left to right and then downwards. If you put this level, you give it the same color as the background, it will effectively kind of eliminate this part, right? So if we hide this, then you can see that it just highlights like a band. I've not seen many people use it. I find it quite handy. So yeah, that's just a trick that I'm gonna be using later on. So just know how it works in case you're like wondering why the Fib tool doesn't show like, you know, full background. Because if I take this away, what happens is this, right? Yeah. Anyway, that's just a tiny little detail. What else? All right, let's get into the good stuff. So now, Roman, you like your one-to-ones and ranges and all that stuff, right? Now you can do what, you know, people do, is like this, and then, you know, link the second one basically by eye, and then create your ranges. Now I saw Adrian use this already, so some of you, I know that you're doing this, but you can essentially just do the same thing with a Fib tool, right? So here we got the range. You can, guys, you can see these lines, right? All right. Now I'm gonna say something that's blasphemous, and you're gonna call me low IQ, but your 618 is kind of a meme, and I'm gonna show you why. So you guys were actually like quite on point, like Adrian and Roman. I saw you guys chatting in Discord the other day about the quarter ranges and stuff. This is basically like what's gonna lead up to where I'm going with this. So yeah, if you add the 0.25, 0.75, you get the quarter ranges. And if you divide these ranges again, what you get is the 125, the 875, and then look at these two, the 375 and the 625, right? So these are essentially the midway point of the first quarter after the the midpoint section. Fuck, sorry. Let me pull this one up, it's better. Right? So we got the quarters, and then we divide these two in half again. Right? Wait, fuck, not this one, this one. There you go. Now look where the 618 lines up. It's literally the fucking same line. Right? Because it's just, what, 0.07 decimal points away from this one. And if you think about it, at least in my opinion, it makes a fuck ton of sense, because if we say that the mid-range, give me a fucking color on this. If the mid-range is basically where we decide if we're bullish or bearish, then if this is the point where we decide whether we're bullish or bearish, then let's say the first quarter, after we reclaim the first quarter, you would say, like, you know, confirming the bullish scenario. Then the rejection at the half point towards that first quarter makes sense as a logical rejection, right? So you would reject here. That would be the 618 or the 382 or whatever, like however the fuck you do it. And the same on the other side, on the bearish side. Does that make sense? Okay. So yeah. I don't know. It feels to me that the 618 is kind of like a meme in a way. Like, it works because it's basically just representing these lines, not because of anything else. Right. Okay, next point. So basically, when I was like, you know, playing around with the FIP tool and doing stuff, I kind of was like, you know, where can I anchor these things to make it sort of like the least subjective way possible, in the sense of, like, you know, removing the decision of like where do you anchor these things consistently without having any sort of subjective kind of thinking around, like, you know, do you do them from top to bottom, top, whatever. So I started kind of doing it like this. Let's put this on log again so we can actually see. It's like, if you look at this chart, like the most obvious points are obviously like the top and then the bottom, right? It's a finished kind of cycle. It's confirmed. It's done deal. This is the top 2017. This is the bottom. And this is gonna also lead into how my quote-unquote 26K call, where it came from. I don't know if you guys have been doing this. I've not seen anybody do this either, but essentially what I started doing is you take like a FIP tool. Let's see, this one, right? And you just anchor it like this. And then what you do is just you create the range, you keep doubling the numbers, right? So the 1-to-1, which means if you put 2, then it's the 1-to-1 of basically the original range that you're measuring. And then you just keep going. You just keep adding like 4, 8, 16, whatever. And then you can put the mid-ranges in there as well, right? So 3 is the mid-range of 2 and 4, 6 between 4 and 8, so on and so forth, right? And you can see that it's already like starting to project lines into the future that, you know, are kind of helpful. Now, one issue I kind of had, because I'm kind of OCD and sometimes with stuff, is when I always kind of like notice them after the fact. Is like the same reason, like, what was it, this one, Roman? I don't know, was it this one that you said? It's like, is it there was like the 1-to-1 from here to there. Can you guys still hear me? Yeah. Yeah, it's like, where do you anchor? Like, you know, there's 1-to-1 ranges fucking everywhere. Where do you decide which ones are important, or which one do you want to have on your chart? You also don't want to have like a fucking million lines on your charts, because it's annoying and becomes like a clusterfuck, right? And I started doing this fairly recently. I don't know why I didn't fucking figure it out before. But essentially, you take that FIP, and we go to the yearly. right? Which is a meme, but anyway. So you put one just on the candle closes, right? So you can use the line chart if you want. And then you go to the quarterly. And well, you can see that it pretty much lines up the same way, so it doesn't matter. So we just leave this one for now. You go to the monthly. It's a little bit offset, so that's good. That's gonna give us like another line or whatever. And then you can do this on the weekly, and you're gonna go however fucking low you want to go. I recommend mostly on most charts, like the weekly, monthly, quarterly is pretty much more than enough. But what you'll notice is that they sort of clustered together, right? And obviously you're gonna get like a fuck ton of lines. So what I did is I'll just delete this now because there's no point, and I already have it done. But just so you guys kind of know where it's coming from, is you can do this for basically each full cycle, right? So from peak to bottom, the 2017 ones are all these. And then you can, you know, obviously take the other one from 2013 as well. And, you know, it becomes like a bit of a mess. But what you actually do is then you kind of just zoom in, right? And what you do is you just take a box kind of thing. And then you just overlap them like so. Now I do this like completely OCD anal. You just take all the values and like put them in manually and stuff and like properly align them and whatever. And then what you get is basically this. And now I'm gonna show you with on the daily, for example, is like how fucking cool this is. Right? Where did it top? Well, somewhere in between all these one-to-ones. Right? And you can see that it rejects here. Right? And then it goes to the next one, boom, rejects, blah blah. It kind of stuck in between these two. See? Boom, 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 boom. And so on and so forth. Right? And I think this is actually quite useful. You can basically do this on any chart. It works on the S&P, and I can show you in a sec if you want. But yeah, this is kind of like where that level came from, right? See, like essentially this is the 19K bound that we bounced off, and this is 24.5K, something like that, right? But yeah, and then if we go to the the CME one, like look, this is the yearly, quarterly, monthly that just lines up there, one-to-one essentially from the original range from 2017, right? So these are all measured from here to here, from top to bottom. The yearly, quarterly, and monthly one-to-one essentially is right here. And as you guys can see, perfect bounce, perfect bounce. The actual reason as to why I kind of rounded it off and called 26K instead of the actual range, which is 24.5 or 25K or something, is that I was expecting, if you take the trend-based fib, I was expecting it to hit at least this one. Why is this on 6.3? Right? So 25K 971, right? I was expecting it to like at least wick to there and then, you know, do its thing. But as you can see, especially on the weekly, these levels are just like, what the fuck, right? Like, look how fucking perfect this bounce there. Anyway. Yeah, I call them RBFs, range-based fibs. It's just I don't know, I thought it was cool. I thought I should share. I think it can be useful for some peeps. You let me know after the stream or whatever. Yeah, as I said, you can do this on the SPY. Basically, these are, let me check. So if we look, we have the one from the 1930s, right? 1932. This one, I think. Yes. So 1972, 73 or whatever. And then 2009, which is this one here, right? And let me just turn these off. So these are the lines from 2009. You can go to the weekly, you can kind of see. Right? Obviously, these ranges are fucking enormous because of like the the time scale and whatever. But yeah, you can kind of see that these lines are like respected, and it gives you like a nice kind of like band or whatever. I don't know. I sort of equate them to how the peak candles work, basically. Like they give you like a zone of like paying attention, and you can like see how it bounces in between the like here and then there. And yeah, the top is like again another one of those levels. If you then overlap the 1972 ones, you see that there's actually another one there. And you can kind of create like sort of a heat map kind of thing as to like, levels of importance and whatnot. Yeah, these ones are like fucking massive. But in a way, you can still see that they're somewhat respected, right? Right, so this is the 2009 dump, and these levels are based on fucking like the cycle of 1932, which is like completely ridiculous. But like, what the fuck, right? Like, look at this. And these are what's yearly and quarterly. That's it. Yearly, quarterly, monthly, weekly, and monthly, quarterly, yearly. Right? Yeah. So I don't know. I thought it was interesting. It kind of also leads into what we're going to be talking about next. So yeah, there's that. Take it for what you will. Test it out for yourself. See how you like it. If it works for you or not, I suppose. But yeah, that's basically where the 26k call came from. Even though I kind of like rounded it up badly, I should have just stuck to the level, and I would have had it like almost pretty much 100% correct. Anyway, moving on. Let's see. Yes, so let's get to the good stuff then. Let me turn this off. We are on log. We're gonna be using the 2 weekly just because on my screen it allows you to like kind of fully see the price. Right, so here we go. Let me just ask you one question before we actually get started. And the question is, what are the like essential fundamental truths that we know about? I don't know, fundamentals. I know the truths that we know about Bitcoin. Like, let me just type it out. Text. Fuck, I don't have it here. Make it bigger. There you go. All right. So, what do we know about Bitcoin? That's just hard fact truth that nobody can deny. Anybody? The halving. Yes, that's one. Halvings, right? Which is approximately every 4 years. What else? The mining cost. Which is how can we like? It's like the difficulty level, or what do you mean by that? Yeah. Okay. Yeah. Okay. Right. But I mean, yeah. Like, you mean like the actual cost per per energy level or whatever? Yeah. 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 Okay. Yeah. This is where we're gonna be like talking about at the end. I kind of want to like get your guys' feedback on what this kind of like potentially means or not or whatever. Anything else? So the other one I would add is, you know, the 21 million coins, which in this case I think, at least for what I'm gonna do, it's pretty much irrelevant. But yeah, it is a fact, right? So 21 million coins. Yeah, technically it can, like, as long as there's a consensus about it, then yeah. But for today, the 21 million doesn't really matter all that much. The only thing I want to add myself is it's based on SHA-256, right? It's based on this algorithm. I'm not a super techie. I don't know like the details of it or whatever, like how it actually works and whatnot. But you know, this is known, right? So when I was like playing around with all these kind of like unorthodox fib kind of things and just testing stuff and, you know, seeing what works, and kind of the idea behind it is, what information can I, you know, extract from the history of Bitcoin that kind of projects some sort of line into the future that's, you know, somewhat helpful, but that I can work with, that can like give me some areas of interest or something, right? Now, as you, let's see, for example, if you do this, fuck, why is it not? One sec. Yeah, okay, so I started playing around with like different levels, and this 125 is one of those that on log. Oh, by the way, what I forgot to mention, the other thing that I was showing you have to do it on linear, obviously, because otherwise the ranges are going to be all, you know, fucking haywire. This one is on log. This is the only one I use on log. But I mean, I don't actually use it that much, but it was something interesting that kind of led me to what I'm going to talk about now. All right, so this 125, I just kind of saw that there was something here. Let's see. I think it's, oh, fuck's sake. What the fuck? There we go. Hold on. There seems to be something towards it. Anyways, 125. What essentially means, like, what does 125 mean? It means a quarter past level 1. So I started to think in, like, what does a quarter mean? What's the deal with these quarters and stuff? And then again, you look here, you see the halving. The halving is 4 years. If you take 256 and you divide it by 4, what do you get? 64. You divide it by 4, what do you get? 16. You divide it by 4, you get 4. And you divide it by 4, you get 1. Right? So I'm starting to see this recurrent pattern of like 4, 4, 4, 4 everywhere. I'm like, okay. Again, what is Bitcoin if it's not literally what it fucking says in the name, which is Bitcoin, right? Fuck. So I made a fib, which is this one. And what I did is just put in all the fucking like bit numbers, right? So 1, 2, and then you keep multiplying by 2. So 4, 8, 16, 32, 64, blah, 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 so on and so forth, right? And you get all these values, right? And then what we do is, if I can drag this to here. Sorry? Yes. Yeah, exactly, right? So these are just regular bit levels, right? It's like computer code, they all fucking use these numbers, right? You know, 512K or whatever, the 1024 resolution, you know. These numbers appear everywhere in computer code, right? Because it's just bit values, essentially. And yeah. So you put this fib on here, and then you say, well, what we're going to do is we're going to go into the coordinates. We're going to put this at 0, right? Because it's like the initial thing. And then we're going to put this on 1, which all it does is essentially lines up these fib levels like 1 to 1, right? So 1, 2 is price level 2, fib level 4 is $4, $8, $16, right? And they're all kind of like lined up. Now, you're already going to start and see something that's like kind of weird, right? So peak number 1, let me get out the arrow. So peak number 1 is like, at least the candle close is like right on 16, right? Peak number 2 is at 1024. Let me, if I can zoom out a bit. And then this one is at 16K 384, roughly speaking. And then the last one, 65K 536. This is essentially just a bit value, right? Now, do you want to see how close this is? This is like kind of interesting, right? So then I thought, okay, well, what about this stuff here, right? Because yes, the data is like, you know, very inaccurate and it's kind of like wonky and stuff, and maybe it's not that useful, but I kind of want to include it, right? So what I thought is like, okay, so well, if this one is like 16 and there seems to be some sort of like quadratic, like whatever, you know, kind of thing going on, what happens if we divide 1 by 16? And if you divide 1 by 16, what you'll get is 0.0625. There you have that number again, 625. Remember when I explained that the Fibonacci level 618 is kind of a meme and that the actual number is this one? Right, so we're gonna now align it with this number, although TradingView is gonna like quote unquote delete the 25. It actually does line it up with this number. It's just that whenever, you know, you enter it, if you go back, it's just 0.06, but we can verify that it actually lines up right, because we're now essentially 16 levels lower. So level 16 Fib now lines up with 1, right? And level 32 with 2, level 64 with 4, and so on and so forth. But kind of like the curious part is that we just divided 1 by 16. It gave us 0.625. And then if we look at kind of where the chart starts, it's literally fucking right there, right? So it spent all these weeks kind of like hovering around that number somewhere. And there we go, right? Now, you might be thinking, okay, so what the fuck? Like, this is just 1-to-1 ratios and there's nothing like special about it, right? Any questions so far? Because I feel like I'm kind of rambling. Keep going, okay. Right. So, before I reveal it, because I kind of have it ready here, obviously. What I'm gonna do now is essentially take 4, 16, 64, and then 256, right? And then I'm gonna add, before these levels, I'm gonna add the essentially the first quarter underneath it, and I'm gonna do that band effect, right? So I'm gonna put one background color before the lower value, so it kind of eliminates the background from the rest, and you can create like these bands, right? So level 4, a quarter level between 1 and 4 is 3, and then, you know, you put the background color before it, so it kind of eliminates the thing. It's just for like a visual representation of what's actually happening, or like at least what I find interesting about this. Right, so let me delete this one, or I mean I can just convert it. That's where is it? This one. Boom, there you go, right? And I think this is like where the kind of interesting part kind of starts. Essentially what we're seeing here is that each level that the price essentially like conquers or whatever is a 4x, right? So 4x times 4x times 4x, we get a peak. Where does it retrace to? About 75%, right? So it retraces back one level. This is literally the only time in Bitcoin history that it actually went below, as you'll see, right? So then we reclaim the all-time high. Where does it go? It kind of blasts through the first 4x. It literally pretty much peaks out at the second level, comes back one level again, and then launches to the next one. Where does it bottom out? Right one level below it again, right? And then what we can do is we can basically take another fib tool, which is exactly the same in terms of values, right? And then what we do is, all we do is we line it up. So the level 1, this one, right? So level 1, which is this one, we put this at 0 again. But instead of lining it up with 0.625, which kind of like creates this one, what we do is we line this one up with basically this one, which is price level 256. So we put 256. And what that's gonna do is basically align these two colored ones together, right? Boom, there you go. So this is just the extension of the first one, basically, right? Because we don't have enough levels in our tool to actually like keep doing this indefinitely. So we need a second one. And we just overlap them a bit so you can kind of see what's happening, right? Now you can already kind of notice that there's something different here, right? So as to where in these cycles, it kind of went from purple to purple and then back one and then to the next purple and then retraced one. The 2017 one actually didn't make it all the way to purple, right? It kind of like went, but it still respected the same bands, right? It went to the second one and then came back one, came back to the second one, came back one again, and then now this top is like fits fucking perfectly into this one. So my hunch is that this is what we're talking about, the mining cost, energy, whatever, the diminishing returns over time is kind of affecting this cycle somehow, right? But yeah, let's take a look at one of Roman's favorite parts of the chart, which is the famous ascending triangle on the bottom of 2019. And what this band does, it literally gives you the range in which it happens, almost to the dollar, basically, which I thought was very interesting. A nice little coincidence. But yeah, let's just fucking let this play out for a bit and, you know, see how it behaves. Right, so I think you guys can kind of get the idea. I found this also kind of like neat. It's like, remember the BART thingy at, what was it, 12K? Like, is it coincidence? I don't know, maybe not. But yeah, it seems to respect this. And I think what's happening is, this is kind of like my hunch, is that essentially if this pattern is like real or whatever, what we're seeing everywhere, like the one-to-ones, are essentially the quarters in between these levels, right? Which are, you know, I don't know, determined by the algorithm or whatever the fuck. Yeah. Let's take a look at current price action, just for the lols. All right, so the first peak, I mean, it doesn't hit it perfectly, but I mean, it's very fucking close. And then when it comes back the second time, it's like literally the UTAD is like, there you go, rejection, like perfectly off the same level, like the SFP, everything there. And then it nukes. Where does it stop? Like the daily close is like literally on the level again. And then for those of you who are like, but sir, these levels or like these ranges are fucking huge. How the hell do you trade this? Well, what we can do is the following. We take another fib tool since we run out of numbers all the time. I call this the intro one, right? And you basically just do the same thing. You just put it there, overlap it or whatever. You go to the coordinates, you put it on 0, you give it the same coordinate as the other one, 256, so that it kind of like lines up the same way. And the values that you give it are different ones, which are essentially the values, the bit values that go in between the other ones, right? So again, the quarters and the midpoints and all that kind of stuff, right? And you create other bands that are like right in between, right? Now, if we go to our most recent price action, another confluencing factor as to like why I said that we're probably not going to go much higher than this is like, look, right? This just happens to be the lower quarter of this fucking ginormous range in between this band and this band, right? And here it kind of bounced as well. It sort of kind of clearly defines also where 30K happened, right? Because we kind of like tried to go under it, boom, 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 whatever. Fake out, rejection, reclaim of this band, and onwards we go again. So is this tradable? Maybe, I don't know. Like, I think it's just a nice tool to have in the toolbox and check it every once in a while. Because essentially I found it when we were like, I don't know, what was it, February, like somewhere here in this. So we were kind of close. I didn't expect Bitcoin to go all the way fucking down to 20K, like this level. If we delete this one for a sec. This level was fucking down at 16K something. I'm like, dude, we're like, this is gonna take forever. So I just kind of put it to the side. I forgot about it. Didn't really pay much attention to it. But yeah, since we're kind of like relatively close now, I'm like, this actually starts to make a lot of sense now. And again, if we look back at history, every single time, every single cycle, every dump, bear market, whatever, this one is the only one that actually had weekly candle closes below the level, right? Here it just... Sorry? Yeah? This one. This one? Or this one? This one. Yeah. In. What do you mean? I don't... Yeah, yeah, I mean... I'm not saying this is gonna be the case. Like, I'm saying, like, you know, I think we also need to like let this play out more, because that's kind of like what I want to dive into now. Is obviously something is different here, right? So you can just, if because of like the diminishing returns, like I think that instead of having bull markets that like jump 2 levels, it's probably now just 1 level essentially. But then again, this doesn't make sense, because this would be halfway. The next bump should be to this one actually. So it kind of like, I just lined it up like this because it initially made the most sense, but it's probably, there's some kind of variance in here. Now also keep in mind, I'm sorry for diverting away from your question, but I understand what you're saying. Like maybe it does just bounce on top and doesn't go inside. Like this is not a guarantee, of course. Like I think that there's a lot of confluence around that level though. I will show you in a sec. But keep in mind also that this is also something that, if you noticed, the chart goes until what is it, September to July, summer 2010, but Bitcoin actually came out in 2009. Like, what was it, September 2009 or something? I don't remember. When, does anybody know when Bitcoin started? When it was launched? Anyway, doesn't matter. It was 2009, right? So if 2009, and let's say this is like one super cycle or whatever you want to call it, it ended here at 2013. right? And then something changed in the sense that the next peak wasn't as, you know, exponential or whatever you want to call it as the previous ones. So I think the general consensus of Bitcoin cycles last 4 years, or like each peak or whatever, it might be incorrect, and it's more of in the first super cycle, so the first 4 years, again, there you have that 4 again, like 4 is fucking everywhere, is we can't see it on the chart, but there was probably like a peak here somewhere, like maybe before it, like a small one or whatever. So 1, 2, 3, 4 peaks in one super cycle, which then translate into the next cycle with diminishing returns and blah, 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 yada, yada. And this is like 1, 2, 3, 4, whatever, you know, ends up going. Like, I don't know, maybe this cycle we actually drop out of it and come all the way back down to this one. Like, I don't think so. But yeah, it could also just kind of like stay here and not touch it, and it would, or maybe wick into it just, and like you said, and just kind of stay on top and keep going. But I can, this is also like, yeah, I forgot about that, good call. So if we display the halvings on it, yeah, like, I don't know, dude. Like, is the halving the causation of the kind of like 4 cycle, whatever the 4 means, like, or is it the algorithm? Yeah. Mm-hmm. Yeah, more or less. But the question is the halving like a result of like how the algorithm functions, or is it what causes the, like, what's the direction of the correlation in between it, right? Anyway, if you display the halvings on the chart, what you'll see is that like it usually happens right when we retest one of those bands. There we go. Right, so right when we come back to it, we start retesting the band. Like the halving happens here, and then it happens here, like right before we enter that band again, and then this one is obviously like not colored, but yeah, the retest kind of happens right after the halving again of the band of the previous cycle high, basically. When will the next one be? It will be here somewhere. So the idea would be what, like, that we're gonna do something like, if we follow the same kind of like this type of thing, it will mean that we kind of like end up falling into here somewhere. We kind of like spend some time here, start reclaiming, and then by the time we get to the halving, we should kind of like be back at 40 something K, right? It's gonna happen somewhere in this period here. Which, if I look at the world right now, kind of makes a lot of sense. That it kind of fits, but who knows? I guess we'll see in what happens. Yeah, in terms of confluence and stuff, like if you take, what is the weekly, you got this thing going on, right? So just from a structure perspective, like it makes a lot of sense that we're gonna retest this line at some point. What else? If we add the RBFs, right? Yearly, quarterly, monthly, one level is right here, which falls right in the middle of the band. And we're just like kind of hovering on top of the last one before we actually would move to the next one. So there's that. What else? If we just hide these for a sec, if we put on the logarithmic uptrend, right? So 2013 here, bottom there. You create like the whatever. Double test of the mid-range, and we nuke out of it. And if we line up the new one, well, we're kind of basically doing the same thing again. Alright, so boom, boom, boom. Chances are we're gonna probably end up here somewhere and then retest this again, and then if we do the same thing, right? Again. But yeah, if you then, right, so it all kind of, again, lines up right around that same area here somehow, right? Which is basically the same area that you, Roman, kind of like with your macro chart are pointing out to, right? That weird box or whatever you have here, like it's pretty much the same area. Any questions? Yeah, well, we're kind of reaching the end. Just let me see, what else do I want to mention? Yeah, this is index. I mean, this is all the data we have, right? There's no better chart than this one. Like, how do we get? Mm-hmm. Yeah, so what I did was, when I created the, let me see, the values, here we go. Yeah, the fib with just the regular like values, not, you know, anything. And all I did was like put this at 0 and then at 1 so that it all lines up, right? And I just noticed that kind of like this distance here is like the same as this distance here, so I divided 1 by 16, which gave me that 0.0625 again, right? Halvings here. Hmm. Hmm. Yeah. Yeah, I think, yeah. Yeah, yeah, I know. Yeah, but I mean that's what we got to work with, right? It's, and so you kind of have to make some sort of assumption at some point. I think you're right. Like, this is essentially what this fib is doing is, you know, it's basically creating like an exponential fib, but just on linear levels essentially, right? Because you're doubling, so it's some sort of like exponential curve or whatever, but you're representing it in like a horizontal lines, or it doesn't. That's the thing. And that's kind of like why I want to share it, and, you know, see what you guys can come up with, if in case you are interested. Like, maybe we can figure out whatever the time factor on this thing is. I mean, no, this is like, the purple zones are just the ones that I highlighted because it kind of like, to me, it makes intuitive sense. Like, there's no other reason than these are the bands that line up with the peaks, basically, right? It's just for visual representation, as to kind of like show you guys what I'm trying to like show, like trying to explain. But essentially, all these bands kind of have the same weight, as to, you know, when price comes to these bands, it's probably going to react to it. And just as like, maybe to hone in the point, is like, I'm not using any chart point reference data whatsoever. Literally all I'm doing is putting in bit values and then lining it up and then putting it. What this means is that you could have drawn these two fibs on day one if you had known about it, right? And it would have predicted this peak, bottom, bottom, peak, bottom, peak, bottom. Yeah, I can probably give you an example. Yeah, I know. That's kind of why I'm, believe it or not, I'm still skeptical about it. Like it seems too good to be true. Sorry? I mean, dude, like it's really not a mystery. Like if you just look at I'll share a screenshot of this if you guys want. Like I can just, screenshot this. You can guys like make a fib that looks like this, pull it and put it up on your chart, and like that's it. You line it up with these two values, and that's it. Right? That's all you need to do. So that's kind of why I'm scared of sharing this on Twitter, YouTube, or whatever, because literally every fucking pleb of like 50 IQ can do this, right? And if it happens to work, then what the fuck? Is like this is gonna be the new, they're gonna hail it as the holy grail of Plan C or whatever. It's ridiculous. It's like, but let me get back to. Mm-hmm. Yeah. Yeah. Mm-hmm. Yeah. Mm-hmm. Yeah. So like I said before, like I discovered this like back in February or wherever, and we were like hovering around 50K or wherever the fuck we were. And I was like, I just kind of left it to the side because these ranges are so fucking big. Like you can't really trade this much other than when the price is actually like interacting with the band. And the other band was like at 16K. I was like, fuck, this is, it's probably not even going to reach it ever. So why do I even bother? I kind of left it to the side, didn't pay attention to it much. And now when the other day when Roman said that, sometimes it feels that price is almost predetermined, I kind of got reminded, checked it out. I was like, whoa, what the fuck? Like, this is actually kind of like, maybe working out. Yeah, so I tried to play with like the date ranges and stuff and like trying to come up with some sort of like just eyeballing and trying to find some sort of pattern. I'm really focused on the 4, right? So for whatever reason, number 4 is like the multiples of 4 are fucking everywhere. And essentially here what you're doing is like yeah, right? I don't know exactly what it is, but it probably is some. Yeah. Mm-hmm. Yeah. What I was thinking the other day while I was like preparing the bullet point script and stuff is what I've never tried is does anybody know kind of like the dates when the new ASICs machines and stuff come out and like maybe plot those on the chart? Yeah. Mm-hmm. Mm-hmm. Yeah. Yeah, so like I said, I think it's a visual representation of what you're describing, right? That logarithmic kind of progression line. I think it's probably somewhat similar to what Benjamin Cohen does on Into the Cryptoverse or whatever. It's just like a different visual representation. I think it could be quite helpful. Like if you have this on your chart, just throw it in the background somewhere, pop it on from once in a while, and just kind of like we're trading in the band, so maybe I should pay attention. Right, this could be like a zone of interest or whatever. But yeah, let me just kind of get back. Like keep in mind that I'm not lining this up with any like actual chart data. All I'm doing is just giving it 2 coordinates. Boom, that's it. You can literally do this on day 1, which leads me to the meme that we talked about the other day. Is like you can literally do this on Sol, right? Sol has no fucking data whatsoever, right? None. Like this is nothing. This is what weekly. Let's do it, right? Let's line this bitch up. Yeah. Mm-hmm. Yeah. Mm-hmm. Yeah. So any chart that has some sort of exponential growth, so usually those are the ones that kind of see adoption, like you say, right? Because the ones that don't kind of like fade off into 0 eventually. Yeah. So like you line this up, and you'll notice that this one actually doesn't line up with 0.0625, just color based, right? Because the bands are all equal distance from each other. It doesn't matter. Like if we line this up with 0.625, it's still, the bands still act the same way, right? It's just that without moving the colors, yeah, like you can either move the colors around, or you can just align it 16, like always multiply by 16, and then just line it up one level higher, and like again, right? Look at this. Like, why the fuck does it do this, right? So, and you have no data. Like, you just line it up from the beginning on day 1, and there you go. Like, boom, boom. It touches 1, which is obviously like a round number, $1. So maybe that's what it is. Like, maybe because every price kind of starts around $1, and then the most pleb option is like, okay, I'm gonna buy at $1 and then sell when it doubles, right? That creates the initial 1-to-1, and then from there on, all the other patterns kind of emerge over time as price goes, because everybody just kind of keeps, doubling their money or whatever you want to call it. But yeah, like this is kind of like the first band is where it finds some sort of resistance, then it goes to the next one. It like basically on the weekly at least, it perfectly rejects this band. If I pull up the intro one, you'll see that this is obviously the middle band. Yep. Or in other words, the price values that line up with bit numbers are the ones you have to pay attention to. So instead of paying attention to $250, 256, right? It's kind of memey. It's kind of like weird, and like, why would it do that? Like, it doesn't make, Yeah, I know. I just haven't. I know. Time-based fibs. I've never used time-based fib. What is those? Let's see. This one? That's it. Ooh, interesting. Okay. Let's go to Bitcoin then. So from here to here. But yeah, then we have to tweak around these values and probably put in bit values again or something. 1. 64. $32, $64, $128, $256. But I mean, but yeah, it's yeah. Right, so midpoint between this and this is 12. Huh. Interesting. Yeah, that's a good. Like I never used this one before, so maybe where's no, the other one is like way over there. That's too far. Yeah. Yeah. True. Wait. Let, let me. Let me. Yeah, but you can't. Mm-hmm. Huh. You would have to. Yeah. But then you still would have to like count the bars backwards or something because obviously TradingView doesn't actually show you the date, so you kind of have to like calculate how many bars backwards. Huh. Yeah. Hmm. Um. Yeah. Anyway, to kind of just wrap this up, I guess, and then we can discuss it. For those of you who are interested, yeah, I don't know. I think you're definitely right. Like, this basically just represents the exponential price bit value relationship or whatever, and we would need to find how this translates like over into some sort of time sequence. Like I think it's probably going to be related to the halving, the mining costs, all that kind of stuff. And I'm trying to like think of it as, like I said before, like if we consider this whenever this started here in 2009, some sort of like it's all fractals, right? There's all this the same thing kind of repeating over and over again. So my estimation would be if the first, let's call this super cycle, took place in 4 years, it had 4 peaks, whatever, blah blah blah. Then the second cycle, wherever that lines up, maybe it's not how I lined it up here, maybe it's some other alignment or whatever. But the next super cycle is going to be some sort of multiple floor, maybe 8 or 16 years, whatever it happens to be, and then it's probably going to have 4 peaks into it, and then so on and so forth into whatever. Also keep in mind that again, we're playing with these 4x values, which then turns into like these cycles of like 16 or whatever. So maybe if the first cycle was a 4 year, then maybe the next one is a 16, or maybe this is one entire cycle, because keep in mind, if we start in 2019, a 16-year cycle would end in 2025. So maybe Yeah, yeah, yeah. There we go. Yep. Yeah, so like I'm not into doing like the math and stuff, but maybe Sam or Haza can like figure out what the math behind it is. Um, like how would you create the formula that kind of like includes the kind of like exponential bits versus the mining cost having whatever difficulty level, and then because you're essentially just representing an exponential growth curve versus diminishing returns, right? Because of different factors. Um, yeah. Anyway, so on Sol you can see like you can just line it up, um, give it the coordinates, and color code the bands however you want, and then yeah, it just kind of like peaks right there. You can do the same thing on ETH, but you'll see that it doesn't line up as neatly. Let's see. Here we go. Kinda, sorta, maybe. You add the second one. To be fair, it kind of like bounced there right again. You can add the mid levels to it. You'll see that it still kind of respects them. I haven't colored, you can color code it differently or however you want. What I think is happening is like if Bitcoin is truly like the king and all these other coins get affected depending on like what Bitcoin does, is that given that they're also working on the same algorithm, the SHA-256, with halvings and all that, like they have their own cycle, but sometimes they just get cucked by Bitcoin, and when Bitcoin dumps, it kind of ruins their pattern somehow. And that's kind of why they get debated and don't actually make it to the full kind of like cycle like Bitcoin does. Maybe, I don't know. It's just a guess, I suppose. Right. So yeah. Yeah. Sure. Sounds good. What? Yeah, the 56 MA. Yeah. I have it on Litecoin too. Let me show you. So this is right. This is just the same alignment again, right? Somehow, like depending on what price values you're working with, like TradingView will kind of like round this number up. But if you just enter the number, it should be fine. Like it's gonna align properly. But yeah, like it definitely see like again, it kind of came down, it touched this, went to the first band, kind of hovered around it. When we finally like broke out to it, like it just jumps from band to band to band, and wherever it stops, and it comes down. If you overlay the intro on, it's probably like, see, overlay the intro on. Oh, look, there we go again, right? So it's and yeah, it just kind of keeps doing the same thing. And like I said, it's I think it's mostly because Bitcoin is king, and it kind of like fucks with their cycle. It doesn't allow them to actually proper do the same beautiful thing that Bitcoin does. Yeah. So I don't know. I think it's a cool thing to play around with. And I'm looking forward to what you guys might be able to discover, because like I said, I really haven't deep dived the whole time-based thing. The DX. This is the RBF on the DXY, by the way, which is kind of interesting. This is the 2001 RBFs. Right? It's kind of bottomed here, blah blah blah. We're now stuck here. If you overlay the 1984 ones, you see that there's like more levels, and then you get the overlapping kind of heat map thing, and like look. So I think this is actually quite useful. Anyway, but yeah, let's. Yep. Bitcoin. There we go. So here or there you go. This one or this one? A faktan 11625997. That's but oh fuck. Yeah. Fuck. Come on. Anchor to the thing. There we go. One, 2, 4, 1. 1, 2, 4, 1, 9900. Yeah. Like the so from here, from the halving, that is 10,114%. $3,124. Yeah, so like one way I look at this just as so I didn't show this because I forgot, but essentially I got some notes here, which is very simple, just to kind of like, I mean, I guess you guys, caught onto this, but because, so each band is like a 4x, 400%. Then a full cycle kind of thing is essentially 4 times 4 times 4, which is 64, which is 6,400%. Right? And then when it retraces one band backwards, it's divided by 4. Your resulting value that you end up with is essentially a quarter the price of where it topped, right? And the way I see it is this basically eliminates the emotional noise from the chart, in a way, if that makes sense. So the wicks are like the deviations and stuff, and yeah. Mm-hmm. Like the next purple band, just if we're following this is ridiculous. Yeah, because that's what I'm saying is like there something switched in between the 2013 2017 peak. Something changed, right? Because it's not doing the same full exponential kind of move. Yep. I could now. Obviously, this is which level is this? This is 6448. So we can just like color code them, if you want to. Right, the colors is just however you want to interpret the thing, right? But yeah, it basically, sparing a couple of weeks. Also keep in mind that like the COVID dump is like a black swan event, right? The price wasn't supposed to do this if it wasn't for COVID. So technically speaking, it would probably have ended up kind of around the same time again. Like it would have probably done sort of like. Mm-hmm. Like as a like I'll just do it like manually for a sec so we can kind of like get the idea. If we kind of do this, dun dun dun. Let's see, it should be. Oh no, this one should then also be, I think, if I'm right. Alright, so maybe the next super cycle or whatever the fuck this is actually ends up being more like this, right? Instead of jumping 2 bands, it's just gonna jump 1 band, and then the next one, yeah, it's gonna get flatter over time. Also, like, look, these numbers are fucking ridiculous. Like, what is this? This is like 4 million something. So, yeah. So, but yeah, there's probably some sort of formula that you can figure out with, keeping the Bitcoin, the bit values in mind, and then contrasting that with some sort of diminishing return formula or whatever. Like, I'm not a math whiz kid that kind of like figure that stuff out. It bores me to death. So I just kind of like do it visually by recognizing patterns. I guess that's like an INTP stuff. We can't be fucked with. Mm-hmm. Yeah. Also, keep in mind that, from what I understand at least, like, this is where, fuck, give me the arrow so you guys can actually see. This is basically where Wall Street joined the party, right? And ever since then, like, the big boys are in town and they have enough funds to fucking manipulate this thing however they want. I would. What, this one? Mhm. So maybe they're just fucking suppressing the price with all the features and stuff, right? And they have the funds to do it anyway, so. Mm. Mm. Yeah. Mm-hmm. Yeah. Yeah. Mm-hmm. Mm. let's see. So 262, and then it goes to 1 million, and then 4 million. Yep. I mean, yeah. I mean, everybody was kind of calling to 250k, 300k, or something like. What was it? Plan B, stock to flow kind of. But that shit was. So yeah, no, this the. So kind of like what sparked our whole conversation in Discord like about a week ago was like Roman mentioning that sometimes price feels determined, and that's kind of like it got reminded me of this thing, and it's like, does this literally mean that price is somewhat determined? That all this fucking talk about fundamentals, about stock market and money printing, like, does it even matter? Is this really like due to money printing? Is it not? Yeah. I don't know. Do you guys know Jeff Snyder? Like, have you seen him around on Real Vision and stuff? I don't know. I just listen to it in the background and stuff. But yeah, Jeff Snyder, he kind of goes like super deep dive. I think he's one of the smartest dude out there that talks on all the money stuff. But he's like been studying the whole euro dollar market for like 20 years or something. And like his logic makes so much fucking sense. Is that the whole money printing thing actually is like a meme? Like it doesn't actually affect the market at all. It's all like this shadow money, international banking stuff that actually is what causes all these stocks and crashes and it's basically all related to liquidity and not so much the actual money printing the Fed supposedly is doing with QE, which, as he explains, it's super like thick and it's hard to wrap your head around it. But once you kind of get the gist of what he's saying, it actually makes a lot of sense that all this QE actually doesn't print any money. Nope. Like I said, what I showed you today is basically as far as I've gotten to it, because I kind of put it to the side as I'm more focused on trying to actually learn how to trade properly. This is more just like a hobby kind of thing. But yeah, I'm happy to like share this stuff with you guys and kind of maybe figure it out together. What the time scale thing on this is, or what other factors are like confluent with this. So yeah, it's this one. 4952. Mm-hmm. Mm-hmm. Yeah, it's I mean 16k 384. Yeah. And then the bottom one is 12. No, it's 900 a day, I think. I mean, yeah. Yikes. Yep. Yep. Let's see. August 2017. Just put it at 15, I guess. November, August. Wait. Well, um, if you like triangles, this is something I was playing around like with in the very early days. Where is this fucking thing? I don't even remember where it is. Jesus. The GAN fence. Yeah, right. Fucking give these things whatever color. Yeah. So if let me see if I remember. So you line this. Yeah, it's like the bull market kind of always starts when you kind of like reclaim the last 8 to 1, whatever the fuck this thing is. Like if you do the same thing like over and over again. Fuck. No. Yeah, so it kind of has to reclaim this, and that's really when it fucking launches, right? And it does this over and over again. But yeah, you can play around with the GAN fence, and it creates all sorts of beautiful triangles everywhere. But this is just a repeating thing. It's like whenever it comes out of this thing, it's like sell your house, kids, wife, whatever the fuck, and like let it go. Anyway, let me find these taproot fucking things. or SegWits or whatever. Yeah, dude. So let's see, August 1, 2017. Oh, fuck. Whoop. August 1st. There you go. Yeah, sorry to disappoint, dude. 15 November 2018. Hold on, you guys are distracting me. What? Where am I looking at? Fuck. 15 November 2018. 15 November. Here. Oh, wait, that's 2017. There. Oh, nice. What's the next one? November 14, 2021. Lol. And Bitcoin Gold in 24 October. Here. Right, let's zoom out a bit. Let's see. There you go. So these are the dates of forks and shit. Huh. Interesting. Interesting. Yeah, so I don't know. What do you guys think? Mm-hmm. Yeah. Yeah. I mean, yeah. So I mean, but then again, like Roman said, it's, you know, there's no guarantee that it will actually drop into the band this time. Like, who the fuck knows? Like, maybe it just fucking bounces from here somehow. Yeah, it's super macro. Mm. Wait, just what do you mean? No, all it's like, forget about the colors. Just imagine that like the any band, like what it means is just price tends to ping pong between these bands, and whenever it recaptures one of these bands, it tends to go to the next one. That's all it means. And then if you want to get some more detail, you put in the like the intra ones to get like a bit more of a granular approach, essentially. And you can do this indefinitely. You can keep dividing all these bands in half and half and half and half, but you're gonna have like 20 million lines on your charts, and it's gonna become a clusterfuck. This is the weekly, yeah. I mean, I think at that point it just kind of enters. That's where your actual trading strategy enters, right? Because I'm starting to lean more and more towards the trader main style, the ICT kind of stuff with the break of structure and stuff. The only thing is like, okay, so you know now that let's say you bought the fucking bottom down here, right? And price is going up and stuff, and then based on this, it's gonna do the band thing. You kind of it's dump band, and you can. Mm-hmm. Right. Yeah. So just let me kind of, and I'll go to the. Just one sec. I'll go there in a sec. All right. So if then your assumption, like you can look at the daily, for example, like, and you can clearly see what's happening, right? As long as we don't lose this band, as long as there's support in this band somewhere, and where it reclaims it or whatever, you can just quote unquote safely assume that we're gonna retest the next one. And if you want, you put the mid line in it just to like see how it's, because this is the mid section here, right? As long as it doesn't. Mm-hmm. Here. Here. Right. This one. Right. The replay, you mean? Mm-hmm. Yeah. Well, again, like I said, it's not a trading strategy. It's something like you add to it. So if your trading strategy, the RSI is oversold, whatever the fuck, and in my case, I would be kind of sort of waiting for a break of structure of some kind. And once it starts going down, I'm gonna look for if there's support on the band or somewhere in the band. And as long as it doesn't lose this band, I'm gonna assume that whenever it does its thing, it's gonna reclaim and it's gonna try to attack the next band, which is like up there, right? So I think that depends on. Mm-hmm. That I think that depends on each individual. Yeah, so it kind of depends. Like, what time frame are you trading? What's your objective? What are you trying to achieve? Are you trying to like nail the pico top? I don't know. It's like, yeah, I know. But then also is keep in mind that at the time I don't remember what the fuck was going on in this time period, right? But you can kind of tell. Yeah. Um. The red one. Yeah. 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 Yep. Based on how this thing behaves historically, right? Historically speaking, if we look at the 2 weekly again to kind of show the whole thing, is that generally speaking, up until now, let me turn off these because otherwise it's too much. There we go. So every time there's a peak in the market, it comes back to the previous band underneath, right? And yeah, right. So with this is like all the data we have. Like this is kind of like what we can maybe like you can confluence it with other stuff that you use, but generally speaking, you just kind of assume that it peaks at a band, it comes down to the other one, and then it's gonna retest or whatever the fuck, and like just take it band by band and see what happens. And if you see that it starts to reject or print like distribution Wyckoff, if you're using that, or just what Roman says, like if this then that, right? And like mm-hmm, 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 mm-hmm. Yeah, yeah, no, that's yeah. Mm. um right. Yeah, so that's kind of like what I was hoping that you guys would be interested. I'm just gonna like share the FIP levels or whatever in a screenshot in the chat so you guys can like copy it or whatever, and then go at it, see what you can find, and like yeah, but anyway, when I was doing this, like the first time I started using this, and I saw this kind of like happen here, and I was like, wait, hold on, what's this, right? And I kind of like dove in, and I was like, what the fuck? Like Roman is gonna fucking love this. Like this is his favorite fucking meme triangle that he's like keeps hammering on about, like how fucking perfect this ascending triangle is, and it just so happens to fall exactly within the fucking band. Like what the fuck? So yeah. Yep. Yeah, I mean, I guess Hazer can figure this out if you want to include it into the profits or something. Huh. Uh-huh. Mm-hmm. Nice. So I'm not a fundamentalist anymore. So I can change my name again. uh, yeah. So yeah, and oh, and Roman, what's your opinion on the the RBF block thingy that I did like um, at the beginning? Um, hold on, let me. So you basically take the previous cycle, so from top to bottom. Yeah, and no, and then you just take the FIP thing and just take the closes, right? And then you see where they This is the same, the quarterly. So you go to the monthly, and you kind of just keep doing the same thing, right? And they're gonna line up slightly differently, but essentially what you then do, right? Right, you get some confidence, then you convert them like into blocks or whatever, and you get like these lines and stuff, right? Uh, mm-hmm. Yeah. Yes, right. Yeah. It's just basically the one-to-ones over and over again, but you just, double the values or whatever, and you keep doubling them. Mm, no, like, yeah. So you take, yeah, different time frames. You take the closes, and then if you like line them all together, what you get is this, right? But you don't want to have like a million fucking lines on there because it kind of gets like clusterfucky. So you just take your boxy thing and then just like put one there, and then you keep doing that over and over on all the like different levels or whatever, and you kind of create like a sort of a heat wave kind of thing, or heat map kind of level thing, and then mm, yeah. Well, basically, what you're doing is like you're represent like you're displaying on the chart all the one to ones on all the different time frames all together at once, and then you just combine the ones that kind of confluence together at certain price points, right? I've done this on like on the Dixie. Let me see, where is it? Do I have it turned off? Yes, right. Hmm. Mm-hmm. Mm. Yeah, I don't know. Like I haven't. Yeah. I haven't really like went full re on it yet because I'm kind of like doing other stuff, and also like I said, I'm kind of like diving into the ICT stuff to kind of get a bit better at finding entries and not fucking them up and stuff, which is a bit more useful in the shorter term than this stuff. Um, but yeah, let me see where else did I do this on oil. I did it on oil. Right. So oil is kind of scammy though, because like this fucking thing kind of. But yeah, so it's basically the combo levels of the yearlies and the quarterlies from all these peaks. So 1980, which is, where is it? This thing, I guess. Yeah, from here to here, I think. And then this one, 2008, 2011. I just kind of combined them all together. Just the yearlies and the quarterlies. That's it. And then you combine them into like bands or whatever, and as you can see, it sort of seems to respect it. It's just kind of stuck in between these two at the moment. The weekly on US oil. Yeah. Mm-hmm. Yeah, I saw you do it on stream once. Like, I mean, you've done it on stream a bunch of times, Roman. Like, the, mm-hmm. Yeah. Yeah. As you can see, my custom indicator also kind of doing some interesting stuff here. It kind of like gives a green signal right here and then a green signal about here. So based on my indicator, it would assume that this is going to be the bottom. So we'll see what happens. I can do another stream another day. This is just the volume, like the basic volume thing. I just overlaid the oscillators that I use in the background, which gives the signals, which are then displayed on top of the volume. So it has nothing to do with volume itself. I just use the volume. Yeah, it's some other oscillators that I use. I can, if you guys are interested, I can do another stream another day if you guys wanna see it if you're interested or whatever. Yes. Yes. Yeah, and like I said, I don't know, it kind of lines up with the uptrend log thing, right? You can see it kind of like crosses right through it, the lower bound. Yeah, like this is literally 75%, and then 80% something, right? It kind of depends on how fast do we get here. Like, are we just gonna hover and like, is this gonna catch up, and are we gonna like touch it here or? Yeah. Hmm. 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 Yeah. Uh, Yeah, sure. No, I can. I'll take a screenshot and like post it in the. Yeah. The. Yeah. So basically, I'm not like mm, telling you that this is the correct coloring. I just use this coloring because it makes the most intuitive sense as to like to explain what's happening and kind of like see the cycle progressions and stuff. But you can color this however you want. You like you can color all the bands if you like. I don't fucking care. Like whatever. But essentially, the levels that I'm mm, because like the reasoning. Let me. Yeah, because basically I started at the beginning and this kind of like was what lined up. This kind of like this is with the pattern that kind of jumped out at me just from a visual perspective, right? And then I would say, okay, let's see how this lines up, you know, further into the future and see what happens, right? And then you can start to see that it kind of diverges, that it doesn't follow the same kind of exponential curve. Obviously, it's like diminished returns and stuff, but it still respects these bands. So the question is, how would you like line up these bands or whatever? But it kind of is up to you. It's like however I encourage you to just like play around with it, see what you can come up with, right? Because this is just kind of like my interpretation of it. But essentially, what I did is I take the full values, and since this number 4 keeps repeating fucking everywhere, like it's always like, you know, you have the 4 ranges, the 1-to-1 ranges, and then the quarter ranges. And you take level 1, 4, but to not create like such a ginormous band by taking the half, I took the quarter underneath it, right? So the first quarter from 1 to 4 is 3. 2 is the midpoint, and yeah, whatever. Anyway, I'm fucking ranting. But yeah, and then you take 16, the quarter below it is 12, the 64, you keep multiplying by 4 and take the quarter underneath it to create like a band, right? And if you just so the fib is anchored to the 0 point, and the first price bar, the price number 1, or fib level number 1, I anchor it to this, which is a 16th part of 1. Right? Again, 4 times 4, or divided by 4 divided by 4. It's always some sort of multiple of 4, because 4 seems to be fucking everywhere. And like I showed you in the beginning, like if you divide 256 by 4 by 4 by 4 by 4, you end up with 1. So that's kind of like where I based this on. And yeah, 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 exactly. So yeah, and just keep in mind that these black things that I like, the black colors that I have, are just the background color with the same value as the quarter that's underneath the band or whatever, just to stop the color from flooding into the level below it, right? Because if you delete these, what you get is this, right? Yeah, yeah. I just yeah, exactly, right. So this is just kind of like the scuffed way, like the right, the cheap way of doing it. But yeah, once you have it set up, you can just save it and you can like plop it on any chart you want like instantly, right? So this is just like a neat little trick that you can use in your fib tool, so you don't have to actually code it into an indicator or anything. You can just like copy these values, put it in. Just remember to put in the background so you can actually like create bands or whatever. Yeah, that's it. And just like play around with that stuff and see what you can find. I suppose. Wait, am I missing one? Yeah, here. Yeah, so that's about it, I guess. Yeah. Mm-hmm. Yeah, I will do. You'll have that in a entry stop loss target. Yeah, I know. This is I'm working on that. Okay, cool. Yeah, looking forward to it. Yeah, no, it's I get the like all the logic behind it. I'm starting to gravitate, like I said, to the kind of like the ICT trader main kind of style with the breaker structure stuff because it kind of like makes logical sense, and I think it's quite cool because it really allows you to like do the kind of multi time frame stuff and nail your entry as well. But I need to get like practice it, get good at it, I guess. Actually, like start using it and stuff. Because I tend to jump the gun, I guess, a bit too early or something. But yeah, I understand the logic behind it. Like I know what you're saying with the entry, stop loss, target, 1%, all that stuff. Like I get what you're. I know. It's fine. Yeah. I just need to like stop getting distracted by this fucking stuff, right? Because I just, fucking like a little kid playing with crayons and like drawing lines on charts and coloring them and stuff, and I get distracted and I spend all day just, fucking theorizing about macro Bitcoin cycles and not actually trading anything. So yeah. Yeah, no, also like that what was it, the Discord message that you skittied me with on the chart or whatever the other day, that I got wicked out and stuff. I basically have like a small portion as like a sub account on FTX that I just use whenever the day I have that I'm kind of feel like gambly and like kind of fuck it, I'll just punt this thing just because I'm got the monkey on my back just kind of itching me to trade something because I haven't traded in a. And I'm like, fuck this, I'll just punt it here and whatever, right? But it's a very tiny, small amount of money just to like play. Yeah, just to get like the monkey off my back and just then I just leave it run and it gets wicked out. I'm like, fuck, well, and whatever. But it's fine. That's not actually like how I try to like trade, for real. So. Right, so cool. Glad you guys liked it. Yeah. So that's about it, I guess. Yep. Alrighty. Well, I'm gonna cut the stream here then, I guess, and talk to you guys in chat. See ya. Laters.